I took a week hiatus off of YouTube because I failed my 4th FTMO challenge. But this video series isn't about me blowing my trumpet about how great a trader I am, especially in Forex, because I'm not. So I saw a comment on one of my FTMO videos saying I need to learn how to trade and I'm going to get defunded in a month the way I'm trading. Now my initial reaction was to be defensive, but in reality the person had a point. I'd failed the FTMO challenge 3 times at the time and my strategy was all over the place. I realized the strategy that I used successfully with equities wasn't working with Forex and I hadn't changed it. So I took a week off to really regroup and just think about how to trade Forex in a different way to get better results. I know I'm going to hear in the comment sections to save your money, blah, 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 but I want to pass this challenge. And not only do I want to pass the challenge, because the challenge is just the first step, but I want to be a successful Forex trader. Now, I haven't been trading Forex long. I've been trading equities for quite some time. And I'm just going to go into a little bit more depth as to why I'm doing all right in equities, but bad in Forex. Let's go. Hi guys, Any aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. It's been roughly a month and a bit, and I'm 3 FTMO challenges in and 3 FTMO challenges failed. Now in this video, I'm not really going to go into how I failed this third attempt because there's no value to be gained from it. It was a series of bad trades and it wasn't great, and I'm not looking at the past and looking at the future now, but these trades are not great and I've actually kind of seen where I've been going wrong. So I'm just going to get into that. This video is going to be more about how to change my strategy to better accommodate trading Forex. So I did some soul searching and I was wondering how comes I'm all right with equities but I can't successfully trade Forex. And I realized that the main difference was that with equities, there's so many different instruments to trade that if I don't see a setup I'd like, I just move on to the next chart. Don't see a setup I like, move to the next chart. For example, I found this, actually I didn't find it, someone found it on Twitter and I copied it, but I saw this falling wedge, so I took a long in it, made some money off of it. With Forex, I found that there was a certain number of pairs that most people traded and the exotic pairs were too wild for me. So I was trying to find trades in these pairs regardless of the setup. And because there wasn't so many pairs that you could choose from, your choices are limited when it comes to maybe 5 or 6 pairs that you want to trade frequently. And if none of them are giving you setups, I was finding myself trying to make trades that weren't there. When with equities, if I couldn't find a clear-cut trade on a specific stock, there's tens of thousands of other stocks to look at that will give me something I want to trade. So I think that was the main difference in stocks. Also, with equities, I'd like to thank someone in the comment section. I can't remember who said it, but I'm going to put the picture up probably. And they were talking about learning more about price action. Now, I know about price action already, but I didn't realize how important it was in Forex in comparison to equities. I've actually employed it more in equities as well now. So what I did was that I started mapping out. I started going into all of the different Forex charts, and I started mapping out all of the areas of interest. So all the areas where there was demand and supply area zones. Now what I did was that I went onto the daily chart. Now this is probably obvious stuff for you guys that have been trading Forex for a long time, but I don't trade Forex, and this isn't a strategy I never really employed, but now that I've seen it and I've looked at some videos about it, it's just clear cut. I don't know why I wasn't using it before. I wasn't using it before because I didn't do my due diligence. I just went into Forex with a bit of arrogance, thinking I could just trade it the way I was trading equities. But in reality, there's these demand and supply zones, and the way these zones are mapped out are based on what I did was I got in the daily chart and I would find areas where the body closed, not necessarily the wick, but the body closed, and I would just draw horizontal lines on the daily chart. So this is an area where there's a body resistance here, there's body resistance here, there's body resistance here, body resistance here, etc. And lo and behold, when you zoom down into the smaller charts, you find that these levels were respected. Obviously there's other chart patterns within these patterns, but as you can see here, these levels were respected for the most part. So I did this on several different charts, and lo and behold, I actually found a setup that I actually want to trade. Now I may be wrong in this, but I've seen that there's the way to make money with Forex is to really find these levels of areas of demand and supply where price spikes up to or spikes down to, and that's where you take your entries. So on the daily chart for the GBP CAD, the pound Canadian dollar, what I see here is almost like a cup and handle, but old me would have just seen, okay, cup and handle, let me just take a long because I see handle. But new me now is seeing that these gray lines, which are areas of these key levels for support and resistance, is where you want to take your entries or exits. So if I took a short entry here, I could set a tight stop loss and make a big move rather than catching these. It's swing trading, but just making sure that you know where the areas of importance are that you can catch the swings. So from what I can see here, this looks like a cup and handle to me. And as you know, cup handles, it goes up, comes back down, and then it shoots up again. And this area here, as you can see, this area here was a level where it bounced off of. So I believe it's going to bounce off of here again. And the 180-day simple moving average is curving up. So I'm still using the same strategy I used for equities, but now I'm just employing a bit more of a measured approach. Also, what I found was that when I was trading the FTMO challenge, I was making small trades still. And the problem with that is that I have to take more trades. If I'm taking small trades, I have to be trading a couple times a week and then just taking on bigger sizes. So for the next challenge, the next time I take on the challenge, what I'm going to do is that I'm going to be very selective of the trades I take, but I'm going to let them play to stop loss or limit. I'm just going to let them play out, and I'm going to take a maybe either 500 pounds or £1,000 trade per trade, so that the ones that hit will make me maybe 2, 3, 4% of my account, and the ones that don't hit, I'll lose 1%. So that means that I have about 10 trades before I go bust. So I'm looking to make at least 10 trades, and if 10 trades go in a row go bust, then I'm out. But if the 10 trades go, if I get some of those 10 trades right, then I'll probably be in the green. But I just need to make sure that I'm making the sizes equivalent to what I'm trying to get, because I was making all these small incremental trades that were making me £100 here, £300 there. But in the grand scheme of things, if I'm trying to get £5 grand in a month, I just need to pick the A1 trades that are points. Like for example here, this is the cup and handle in my opinion. I don't know if this is going to be right, but if I was to take a long here, my stop loss would only have to be about here. So even if, let's say this is 37, let's say I put 10, so this is 370, this would be 3,000. So this is like a 10 to 1 risk to reward. So I would be risking about £400 to make £3,500. And these are the type of trades I need to take. So that would take me over half of my target straight away in one trade. If I was wrong, I'll lose £300. That's all right. That's in the grand scheme of things, that's not even 1%, which is all right. So I need to take into consideration these areas of demand supply. Now I know most of you that are watching these videos that are seasoned traders are going to be like, duh, idiot. But yeah, I didn't know this, and you're watching me as I learn. So bear with me. This is not a guru channel. I do not claim to be a guru. This is my journey. So the stuff that's obvious to you is new information to me, but I'm learning as I go along. And hopefully this channel will be maybe different to some of the other channels that you see, where it's just all about showing successful traders from when they were successful trade. You're watching the progression of me not know what I'm doing with Forex, and hopefully I'll get to a place where I'm a pro like some of these other guys. But with equities, no issue. Funnily enough, I took a couple trades on DAX because I wanted to make some money. What I did was that I put 300 quid in my IG account because I hadn't been trading it because I've been focusing on the FTMO challenge, and within a day I doubled it, and I found it easiest to double it because it's such a small amount. I think psychologically having 50k made me lose my head, and I wasn't trading properly, and that has always been my issue, sizing up. So I need to get to that mental state where if I could double 300 quid in one day with a couple of trades, then why can't I get 10% on 50k? It's ridiculous. And I just need to do some soul searching, and I think I've caught on to how these forex traders find pivot key levels to take trades at. So the first trade I want to take would probably be GBP CAD, and I'll set a tight stop loss around here, risk about 300, hopefully ride it all the way up to the top. If I'm right on the cup and handle theory, I might be wrong, but then at least the risk to reward is skewed in a way where I'll live to fight another day. So this is what I'm going to be doing. I'm going to set up my next challenge now, challenge number 4, but I'm doing it with a new approach to the other ones. So I'd like to thank some of the guys in the comment sections that held me to task. and were actually giving me good advice, because I watched some videos on some of the forex strategies, and this is what I saw, and it was something that I didn't use before, and actually I'm now employing it in my equities trading as well. If you look at this trade that I took, the take profit zone was obvious to because of the key levels. I had key levels mapped out on the daily chart so that I knew where the take profit zone would be. This was a key level based off of the body closes of several of these candlesticks, and lo and behold, it found a resistance here. So this key levels approach is very useful, even with equities, and just another tool to my arsenal now that I know this. So that's great. But yeah, so that's me talking about how I'm going to be trading going forward. If you got any advice on other things that I may be missing in my forex trading strategy, please leave in the comment section below. I'm open to learning, and as you can see, the comment sections, I like constructive criticism, because it's only going to make me a better trader. But anyway, guys, it's me, aka the NocTrader, signing out.